Wednesday, March 20th. We are looking at the SPX. We are about flat on the day, or about as flat as we can be on the day. This is, of course, an FOMC rate decision day. No expectations of a move in rates, but what everyone will be looking for is any signs from the Fed and from Powell about future interest rate cuts. Is May completely off the table? What are the odds of June? They've been pretty consistent on, which is about 3 rate cuts this year. What's their view of inflation, which at the very least has stopped going lower. We've seen Treasury yields climb a little over the last couple of weeks. Where do we stand? And is the last 1% of inflation the trickiest and stickiest part, which is sort of the sense right now, and what are the Fed's moves of that? Of course, going into the Fed, we have the SPX pretty much going sideways today, a very small range. So far, this is traders not getting ahead of the FOMC decision, sort of a continuation of that sideways action into the close. Zooming out a little bit with the 1-week chart, you can see that we are just shy of this 5,200 level in SPX. Going to the 1-month chart, sideways action over, basically since the beginning of March. We're towards the upper end of that range right now, but it has been sort of sideways action, especially when you compare to the 3-month chart, where you can see this, pretty much a steady move higher here, and then we're kind of sideways, kind of consolidating. We're seeing, a bit of a confused market on the single stock level with the prior high flyers like NVIDIA and SMCI and all of those doing a little bit of sideways action. We're starting to see some signs of buyers come back to those Apples and Googles and Microsofts of the world. You can see on the IWM chart, we've got the 1 week, it is pretty much sideways. And when we look at this 1-month chart, you can see it sort of top out. It tried to make that breakout up towards 210. Let's go out even further here. See this ping pong action back and forth around this 200 level. It's tried to get above it. It failed. It's pulled back a little bit, and then it's tried to make another run recently, and it's kind of failed up here at this level. This is the 200 level. The reason I'm pulling out IWM here is it's of the major indices, it's probably one of the most rate sensitive because of there's so many smaller cap companies in this that are really dependent on interest rates, borrowed money. You look at like solar stocks, for instance, in IWM. The SPX, we've got an expected move of about 0.7%, and this should hold into the FOMC meeting. Probably won't see it much below 0.6. Or, you definitely won't see it below 0.5 into that. So expect, you can see the IV right there, it's 39. And what that is that's basically the market and market makers holding those straddles at you could think of it as a shortcut at a certain dollar amount for the expected move. And they don't want that collapsing due to normal intraday theta, because this isn't a normal day. If you look on the 1-week chart, you see this 38 vol for today, 39 vol almost, drops down to about 21 vol for tomorrow, which is still high and much higher than we've seen recently, then drops down to 18. The 1-month chart, you can see, it drops back down to 13 pretty quickly. So a lot of premium, a lot of expected move in the next 2 days that sort of goes back to normal next week. And so that gives you an indication of an FOMC meeting where everybody knows what they're going to do, meaning they're going to do nothing here as far as rate cuts go, but they will be telegraphing how the rest of the year might play out. And that's what everybody's going to be watching for. The expected moves, we see 52, let's call it 15 on the upside, and let's call it 51.40 to the downside. On a 1-week chart, that expected move to the downside is actually even inside yesterday's. So if traders are selling premium into the event, they should be very aware that that level is pretty close compared to just how we've traded even in the last 2 days. Now, from a weekly perspective, going out to Friday, we've got levels of about 52.30 or 35. and 51.20 in selling premium based upon, the weekly levels. Maybe you're looking at 52.50 and 5100 to get outside that expected move and give yourself a little bit of room. As far as trades for the week, let's go into an iron condor and let's select Friday. And this just gives us a sense of some levels. Let's go in here, and of course this is the 51.20 short put and the 52.30 short call. If we took that a little bit wider and said let's get down closer to that 50, let's take it down to the 5100 on the short put, and then that gets us to that 52.50. That's what we were just talking about. And so, that's 150 wide iron condor, and that gives you a sense of, some big round numbers, and that would be risking about 350 credit put spreads and the credit call spreads. Because this is centered, they would be about half of that. They would be about 75 to 85, depending on which direction. Let's go in and take a look at QQQ. We've got about a 0.9% expected move for today. Going out to the end of the week, we've got 5% expected move. You can see those levels where they match up to in the sort of recent days and the recent way that Q's have been trading, sort of highs and lows. It kind of catches those. Makes a lot of sense from how options traders are pricing potential moves. We are kind of right in the middle of that range, and that's why you're seeing that sort of pure expected move lining up with the highs and lows of the last few days.